So in this chapter, we'll be discussing about subprime crisis. This is one of the other crises that has hit the global economy. In fact, this was one of the reasons for the severe global recession that started around 2009. Okay, so let us see the origin of this crisis. So in early 2000s, there was something called the dot-com bubble. Okay, so this is related to the IT sector. So prior to 2000, the IT sector was in full boom. A lot of IT companies have sprouted and they're doing good business. And then in 2000 there was this dot-com bubble, and a lot of IT companies have gone bust. And also in US in 2001 there was this 9/11 attacks, okay, on the World Trade Center. So to revive that US economy, the Federal Reserve of US have cut the interest rates to very low levels. So what happened due to this was the home loans picked up because the interest rates have been cut. The home loans picked up and people started taking a lot of home loans because it was cheaper. So that housing boom in around that period from 2000 to 2005, mid 2000s, along with that lower interest rate, have prompted many banks in US to offer home loans to individuals with poor credit quality. So even so we discussed that borrowers will be rated by credit rating agencies. So that boom, what happened as a result was the US banks started offering loans even to people who had poor credit rating. So the credit rating agencies placed AAA rating on these junk securities, claiming they were as safe as US treasuries. Okay, so those who bought the securities, so who buys the securities, like the fund managers, they relied on the ratings of these credit rating agencies. They failed to do adequate due diligence on their own before buying them. Okay, so these loans were called subprime mortgages. Subprime means prime, top class. Subprime means they're inferior in quality to prime. Okay, so these subprime mortgages, initially they were affordable, but they were reset to higher interest rates after some time. This also we discussed in the earlier chapter. Floating rate loans, there will be something called a reset clause. Okay, so after this happy period was over, after this mid 2000s, around 2007 or around that time, these subprime mortgages were reset to a higher interest rate. Now this increase in payments resulted in number of defaults because the people were having a lower credit rating and they could not they cannot meet the installments, and this increase in payments resulted in number of defaults starting around 2007 and it peaked around 2009. Many borrowers were unable to make the payments, and due to this dozens of banks went bankrupt and a number of investment firms had huge losses. Okay, so this crisis entirely was a result of too much borrowing, and this is one of the reasons for the global recession that followed around 2009. Okay, so for interviews this brief discussion will be sufficient. So if they ask you what was subprime crisis, just it should be explained in 2 to 3 sentences. That would be sufficient.